let's take a look at XOP Herald, a potential option trade here for those who are bullish on this sector.
Yeah, absolutely. And what attracted me to this trade was not only is the energy sector a strong sector, but you see how it's gone down to the 21-day exponential. And normally, when it comes to one of the questions I get quite a bit is, okay, how do I pick my strikes? And normally, I like to start with the Delta 30, but in Delta 30 strike. But in this case, I'm going to go strictly on the technicals. So if you hold your mouse on today's price action, you're going to see that 21 day is right around 149. So the strike I'm choosing is going to be a little bit below that. So the put that I'm selling is going to be a little bit below that. It's actually going to be the 148. So selling a put, that's a bullish play. So if it gets down to that 148, then and bounces off of that, then it'll be profitable. Or if it just stays at the 21 and makes a bounce, so it'll also be profitable. So I'm using strictly the technicals just to put together this trade here. So I'm going to share my screen. We're going to go to the platform here.
Sounds good.
All right. All right. So you can see my screen there.
Yes, we've got it. And it
All right.
looks bigger. It looks
Yeah. I've been
good.
making sure that I increased the font for this trade here. So we're going to be looking at XOP. You see the ticker in the upper left, and I'm going to go out to the October 20 expiration. That's 32 days out. So I'm going to click on that. And then I'm going to scroll down a bit here, and I'm going to start by selling the 148 148 put here. Remember that was just below that 21-day exponential. So I'm going to sell that put, and then I'm going to buy the 143 for protection.
Because you usually do a $5 widespread.
Yeah, I'm still doing a $5 wide, but I'm going just strictly on the technicals. Usually I look at the delta and make that decisions as to what strike I'm going to choose. In this case, I'm going strictly just by the technicals. So again, that 21 day, that was right at what 149. So the strike I'm choosing, my put is at 148. So again, selling a put, that is the bullish part of this trade. Yeah, so I'm selling the put at 148 and I'm buying the 143 for protection. So that's going to give us a credit right now. It's at 154. My numbers are based on a 160 credit. So let me raise that here.
And
Okay, so
Harold,
yeah,
if you did do the 30 delta, which strike are you choosing the long put or the short put at that 30 delta?
the short.
Okay.
So if I were going to go this delta, I'd be selling either maybe the 144 or the 145. So that's the first thing I look at. What since it's a short put spread, I look and say, where's my short strike going to be?
So
And then
you'd
the
bring
long
in
strike would go ahead.
I was just going to say, so you'd bring in a lot less credit, but
Right.
your probability of success would also be much higher.
Right. Yeah. So that's an approach that I know a lot of traders take because they want to use the math rather than looking at the chart. In this case, I want to use the chart and make my choose my strikes based on support and resistance. That's basically what I'm doing here. All right.
And
So,
Allie, you had a question though.
No,
right?
I was just the $5 wide. So if you did go with selling the 145 or 144, then you would be buying the 140 or 139.
right.
To get the $5
Yeah,
wide.
I still like $5 wide. That's my go-to. Sometimes I'll go $10 wide, but $5. That's try to be consistent with that. All right, so based on the strikes we've chosen, we got a credit of $1.60. So let's take a look at the numbers here. So I'm gonna click on confirm and send in the lower right, and then here are the numbers. First thing I look at, that's the break even. So if this stock goes to 146.40, I mean that's my break even. Well below that 149 where the 21-day exponential is. So you want to write that number down because I'm going to be using that as my stop loss. So the 146.40, that's something that you want to keep in mind here. So 146.40, that's going to be my stop loss, and then the max profit It's always going to be the credit received. So let's take a look at the numbers. We're going to calculate the probability of success, and we're going to look at how many contracts we're going to buy based on the numbers that we see here. I'm going to edit over on the right side. I've got some notes here. So probability of success. It's a two-step process to calculate that number. First thing we need to do is determine, how much are we risking in this trade. So to figure that out, we take the width of the spread, which is $5, subtract our credit received, and that's going to give us an actual risk of $3.40, or in option terms, $340. So that's our actual risk in the trade. All right, now determine the probability of success. We take that actual risk, which is the $340 divided by 5, which is the width of the spread, and then multiply by 100, which gives us a probability of success of 68%. So I like it when it's around that 70% number there. So we're good there. So probability of success at 68%. Our return on risk. So we know how much we're going to risk. What kind of return could we possibly receive on this in this trade here? So to determine that, we take the actual credit, which is $1.60, divided by the actual risk, which is $3.40, gives us a 47.06 return on risk, which is not bad for a 32-day period. So how many contracts are we going to buy? So we've been using that number of $2,500. $2,500 that's based on your level of risk, your portfolio size, etc. So we take the $2,500 divided by the actual risk, and that's going to give us 7 contracts. You can't buy 0.35 contracts. So 7 contracts, that's what we're going to put in a trade. Now, how do we manage this trade? This is more important than the other numbers. What are you going to do with once this trade is executed? So again, the break even, that's the 146.40. You want to keep an eye on. So I'm going to use the break even as my stop loss. I'm going to be looking to take profits on this trade at 80 cents. So that's 50%. So let me wind that out. So that's 50% of the credit received. And then the managing the trade at 21 days to expiration. So I'm going to keep an eye out on this number. So if we haven't gotten to the profit level, and or we're at a loss, if we get to 21 days to expiration, that's when I need to make a decision. Am I going to just close it out, take the loss and move on? Am I going to roll it to the future? Rolling is a way of just buying more time to see if it's going to work out. Or let's just say, yeah, I didn't get the 50%, maybe I'm up 30% or 35%. I'll just say, okay, I've got a profit, I'm going to take the money and run. So 21 days expiration, I'll make that decision when that comes along. So 7 contracts, let me just raise that number here. And again, let's take the look at the numbers, confirm and send. So again, there's our stop loss, and then the max profit, and then there's the amount of the buying power. That's the money's required for this trade here. So I'm going to send it off and see if we get trade
Like,
close
Yeah,
or
if
filled
we
here.
can leave this screen up, there were a couple of follow-up questions here, and you kind of just answered one, how much money the trade ties up. Roger wanted more details on that, and that's sort of the benefit of options, right? Depending on the exact details of the trade, it ties up less money than if you were to buy outright, correct?
Right. It's much more capital efficient. That's what attracted me to options to begin with. You're losing less capital, and as a result, I've gotten a lot more aggressive. Justin just mentioned a few minutes ago that you tend to get a little bit more conservative as you've gotten older. But as I've gotten into options, I've actually gone the other way. I've gotten a lot more aggressive because I know I'm not putting up as much capital uh, trading the option versus buying the shares. This trade could work if you just want to buy the shares of XOP. That's one of the things I try to do with these option trades. Whether you can do the option or you can buy the shares. I try to find something that'll fit both
Right.
types of trading.
Yeah, something that works as a stock setup. And I guess you're able to get more aggressive because of how you're able to define the risk.
Right,
Not
exactly. So
not all option trades are like that. There are some with some pretty unlimited risk there, but with these spread trades, you're defining your risk.
I'm defining my risk. I could go naked. Naked meaning if I just wanted, I saw support at the 21 day, I could have just sold a put, but it requires a lot more capital to do so. I mean, I can show if I could just sold that 148. Oops, I didn't want to. Oh, if I sold that 148 put, you can see it's yeah my it's blocking here. So requires a lot more capital. If I just sold that put that one, and that's just one contract. Well, a little bit more capital, not a whole lot, but I could have done it that way also just by selling the put.
But look at the
Uh,
max loss.
yeah, your max,
Yeah.
yeah, right there.
It's
That's
almost
the
like
hit.
owning the stock. You know,
Right,
it's basically
exactly.
the same as owning the stock at that strike price minus the credit you receive. You know,
Hmm.
that's how that max loss is calculated.
Mhm.
And then if I add the okay, I don't want to take the time to do that, but if I added the selling the excuse me, buying that 143, that's going to drastically reduce that max loss.
Mhm.
Okay.
I don't know why I can't get it here.
And again, the why behind this, you're looking for stock setups. And with the bull put, that is a bullish trade. You have a bullish outlook. And with this type of trade, you're defining your risk. Any other thoughts
Right.
Harold, on the why
Uh,
behind this kind of trade?
the why was just because the energy sector, that's the only sector of the market that is showing signs of strength. That's what's working. So I was looking in that area, and XLE didn't look too attractive to me. Some of the other individual stocks didn't look so. So I just want to get some exposure. I don't have. Well, I have do a little bit. I do have uh, uh, TDW. I have that a trade. I have a position in that stock, and that's working out. But I just want a little bit more. I have stock position in this one here. I don't have an option. I have shares in this particular trade.